What is up, guys? Scott with Never Hedge, back for another Clove update, and we started the day off very fucking bad. Sell off from the open at 12.20 all the way down to 11.40. Very bad. A lot of people were very scared when this happened, and now we are slowly but surely working our way back up to. Right now we're sitting at 11.78. Yeah. RSI got down as low as 8, which is very oversold. And now we're working our way back up, clawing our way back up from that dip to a high in the RSI of 67. So almost getting into the overbought category here. MACDs were looking very bearish to start the day. Now we're coming back down to back up to normal here, and I want to get to a couple of things on Fintel. So we do have some more shares available to short as of today. Got to a high of 200,000, now all the way back down to 40K. And the short borrow fee rate is lower than it was from the high of 135%, now down to a paltry 55.71%. That's still very fucking high. Let's go to a couple of things here. This one, I'm not going to read this whole thing, but it is worth going over. 10 signs of an upcoming short squeeze by David Stone. I'll just do the broad strokes here. Your stock is trading near 52-week lows. Let's check that out. Pretty well, closer to the low than the high, for sure. High short volume, high short interest. Yes, checked and check. Borrowing costs keep getting higher. Double check. Sudden drop in borrowing costs. Triple check. Strange behavior of ITM options. Upcoming major catalyst. Stock is trading at a huge discount compared to competitors. Check. Overwhelming sense that something fishy is going on. Fucking all the checks. Shares available to short approaches 0. Yes, absolutely. And institutional investors are loading up. Yes, I got something on that here. Q2 inflows, $872 million in positive change in institutional ownership for this past quarter. So big change in institutional ownership. All the checks on this one. All right, let's get to some DD from Treat Scary about 3 hours ago. Everything makes sense now. We could all be millionaires soon. I see a lot of people worried because the price is dropping as well as CTB and shares being returned. There could be many explanations for this, and it doesn't mean shorts are covering. First of all, going into a long weekend, there's usually above average selling, not to this degree, but still notable. There are many things going on with Clove that has left people unsure about the coming weeks. Options, lockup, dark pool. If you're feeling nervous that maybe a short squeeze isn't going as well as it was, or maybe not happen, or that the price will continue dropping, then please take the time to read this. We know that hedge funds read this sub as well as others to gain knowledge and how they will use that to manipulate the chart to scare you into selling. They can do this in many ways and will do anything to take your money. I'm an engineer, and I've spoken with 2 people that work for companies like these. All of them say the same thing. They are terrible, greedy people that don't give a fuck about anyone or anything but taking your money. They say that just working for them makes them miserable, but they pay better than anywhere, so they continue to go back day after day, hating their life, feeling guilty about themselves. That being said, let me explain why today could be the lowest we'd see forever. The lockup also has people worried, but there is good reason to believe big long positions are trying to drive the price down before July 6th. There is a clause in the agreement that states 33% of their position would be lost if the price hits above $12.50 upon lockup expiration, as well as 66% if the price exceeds 15. So let's see here. So I think these people are doing their best to keep the price below $12.50 and definitely below 15. Since the float is 140% institutional ownership, then they're currently at a market price of 11.4 is $1.8 billion in institutional shares. If the price passes 15, they would lose $1.2 billion in their long positions. It is very, very likely that these huge long positions could also be huge short positions, and they're dragging it out until they get the full amount of their shares on a lockup expire. Not only are they making a huge amount on their shorts, because since the largest position was taken on the day Clove exploded, but they will make the full amount on their shares on the lockup. And just the icing on the cake is that banks will also be trying to drive the price down to keep the large amount of options out of the money and expire worthless. Did you get that? So they are trying to keep the price below $12.50 until after July 6th, or until July 6th, and definitely below 15. So this is all going according to plan for them, apparently. Hedge funds own shares of Clove, and they can purchase more from dark pools, then sell these shares on the open market. They can sell these shares and then buy them with their shorted shares, which drops the CTB and SI percentage. So let's say they own 1 million shares of Clove and have 500,000 shorted. They can sell their 1 million shares, dropping the price while covering 500,000 shares. The result would drop price as well as cover some of their shares by making it look like they covered. Meanwhile, they actually decrease their position by 500,000 shares, and everyone would be posting Ortex data saying saying short interest down, CTB down, yet price red, and start to panic. This is another form of manipulation they use to get your shares at a cheap price, as it caused panic like the last 2 days, and now they can actually cover some shorts as well as restock on their backup supply. Remember that they can buy shares on the dark pool and report it on a later day, such as a green day, to make it appear that it was retail. Dark pool data is heavily in favor of shorts, and the rolling 20-day average exceeds 2.3 billion, which is much larger than public float. That means there could be naked shorting, although we would need to dissect the returned and bought shares over that 20-day average to really know for sure. And the cost to borrow fees hit a whopping 140% as of Thursday, which means that shorts who bought at that rate would have 260 days before their entire investment is lost on fees alone, while still having to pay back the initial investment. Even though the cost to borrow fees are actually seeming to drop, they are fixed, and so whatever rate they bought initially is the rate they must pay, even if the cost to borrow drops. I believe that there are many large institutions and hedge funds that are indirectly working together on dropping the price, even without verbal communication. So this is very important too. All of these events line up to the lockup expiry, and makes me believe that the end is very near, and the biggest short squeeze we have ever seen could be right around the corner. Did you get all that, guys? Let me say that one more time for you. The biggest short squeeze we have ever seen could be right around the fucking corner. Yes. Everyone's hammering this on the red day today, guys. Let's keep it going. That's just about going to do it for this one, guys. As always, please make sure you're subscribed to the channel for more updates on Clove, as well as other stocks and tokens we like. And I thank you guys so much for watching this far, and I'll see you in the next video.